Wang. Hello, everyone. You are watching World Bank, partners with CCG, to launch the latest edition of Global Economic Prospects in China. This program is part of CCG Dialogue, webinar series presented by the Center for China and Globalization. This session is moderated by CCG President Dr. Wang Huiyao. Dr. Wang, over to you.
Thank you. And so hello, everyone. Good evening to our World Bank experts, and also good morning. Good evening to our audience here in China, of course, but also good morning to our expert from World Bank and also here in Beijing and also in Italy as well. Welcome to the online launch of the latest World Bank flagship edition, Global Economic Prospects, which is live from CCG and head office here in Beijing. My name is Ayhan Kose. I'm the president and founder of a Center for China and Globalization. So thank you for all your attention and also come to our live event. So we know that the world now is really still going through this pandemic, but we'll see probably some light at the final end of the tunnel, and we will see the vaccine is really produced and vaccinated quite rapidly, particularly in developed countries and in China. I have a figure here that the worldwide cases of the pandemic, we have already 170 million, and but the vaccine we have already 2.45 billion people has been vaccinated, and on the China situation, we have 923 million people doses are being vaccinated, and for American cases, about 311 million people has been doses has been vaccinated. So you can see the rapid growth of the vaccine injection in the developed countries, and also the flagship report from our World Bank is basically forecasting a global growth at the 2020 of 5.6. And of course, we have the US project for 6.8 and also China project for 8.5. So, but I'm not going to talk more on that. We're here to our expert from World Bank to discuss that. So we are very honored and pleased to be partnering with the World Bank for the third time now for the launching of its biannual flagship World Bank report. And we're very pleased to have Dr. Kose, Director of EFI Prospects Group, Dr. Rezi, Country Director for China and Mongolia and Director for Korea, and Ms. Vashakmadz and also Ms. Quaglietti, both are senior economists at World Bank with us today, actually. So we have actually hosted the launch of this report in China back in January of this year and also in June last year. The series of reports, Global Economic Prospects, focus on global economic development and prospects with a focus on emerging markets and the developing countries, emerging and economic development. So it's released every January and June. So we actually is the time that we are just in time for that. I know that our expert at World Bank has just released that in Washington, just recently, and then it's really had many world coverage, many attention, and it's really great. Now we are releasing this again in China with our board audience tuned in tonight. And so this can be really serving as an important reference for government, business, and academics around the world, but also particularly for the contemporary discussions and also policy implications for our currently fighting pandemic, but also how we can really put the world back on feet and put back the world economy into the normal track. So what are the trend? What are the development pattern? It's really great to have our expert here. So today discussion will be actually basically composed of mainly four parts. To begin with, I would like to invite Dr. Kose to outline the report that projections of the world economy in the 2022, and also followed by Dr. Razor, who actually then will share his prediction of Chinese economy. Of course, I saw him just interviewed on the China Daily for a very extensive talk on the Chinese economy. He's now very familiar with. We will be also have a Q&A discussion. We will also have other World Bank experts with us to discuss the issues. We will have some actually media questions, and we'll take all those at the end, probably after our presentation and discussion. So to start, I would like to introduce our main presenter basically tonight, Dr. Kose, and he's the director of the World Bank Group's Prospects Group, which is in charge of this bank's famous global prospects report, global economic prospect report. And also he's basically in the group that look after the bank's work on the global macroeconomic outlook, financial flows, and the commodity market. And of course, Dr. Kose has written extensively on international macroeconomics and finance. He has a latest book, Global Waves of Debt in 2019, analyzed the likelihood of consequences of the post-crisis debt accumulation in emerging and developing economies. So I remember very well last two times, Dr. Kose has given a very good presentation of the economy. I think this is really everybody expecting, everybody is looking, how we can really have the new situation. Now we have all the global leaders also met at G7 and US, European countries. We'll have a G20 later this year, and we have a BRICS summit. So there's a lot of international attention on the major institution like World Bank to give us the latest projections and how you come to this conclusion and what is your analysis on that and what is your policy recommendations. Those are really all relevant and also coupled with your knowledge on China as well. So I'd like to really have Dr. Kose to start our feature presentation of the latest Global Economic Prospect Report. So Dr. Kose, your floor, please.
Thank you, Henry. Let me first say good evening to our audience in China, and then let me thank you and your team for organizing this event with, of course, Martin's team, our office in China. We greatly appreciate presenting this report, and we greatly appreciate your support and the CCG providing this great platform as we try to communicate our messages around the world. This is critical for us to basically come to China and have this exchange. This report is the 30th anniversary edition of Global Economic Prospects. The first one was published in 1991. For those who remember, during that period, 1991, global economy was going through a recession. Here we are, 30 years later. We just had a deep global recession, coming out of that recession, and we are discussing the challenges confronting the global economy. The recession 1991 triggered by credit market problems, financial sector issues in many countries around the world. The problem we have now, of course, triggered by the health crisis, the pandemic, and then turned into a very serious economic crisis. What I'm going to do today, I'm going to talk about some issues we are presenting in the report. Lucia and Eka will join me as well in presenting different parts during the Q&A session. The report has the usual global outlook and regional outlook. In addition to these, we have three analytical pieces. One piece looked at the possible growth outcomes beyond 2021. Another piece focuses on elevated trade costs. What are the causes? What are the remedies? As we look around for an engine of growth, trade is going to play an important role. And finally, we look at this topical issue, emerging inflation pressures around the world, and what does that mean for our member countries, especially, of course, emerging market and developing economies. During the next 20-25 minutes, I'm going to focus on three questions. The first one, what are near-term growth prospects for the global economy? Second one, what are the implications of high trade costs? And the third one, what are policy priorities? Throughout the presentation, I will use this acronym, EMDEs, that stand for emerging market and developing economies. Let me start with the first question. What are near-term prospects for the global economy? When you look at the external environment in terms of global trade, global financial conditions, global commodity markets, there is no question the global economy is bouncing back from the last year's record deep global recessions. In the case of trade, we have a very strong upturn, especially manufacturing trade held up well, services trade picking up quickly. When you look at financial conditions, conditions are benign for emerging market developing economies. There is a little bit of increase in borrowing costs, but still the costs are quite low. And if you look at commodity markets, you see a record high increase in prices of many commodities. So against this backdrop, we are forecasting growth at the global level this year around 5.6%. This will be the fastest pace of global growth in nearly 50 years, and the fastest global recovery following a recession in more than 80 years. Relative to January, we have upgraded our global growth forecast significantly, 1.5 percentage points for this year. And next year, growth is going to remain strong, we think, even though, of course, it's going to moderate 4.3%. Now, when you look at the sources of this growth, one thing you immediately realize, it is not evenly distributed. You have advanced economies delivering really record growth around 5.4%, with a significant upgrade. There, US leads the way. We are expecting US to grow near 7%. Henry, you mentioned 6.8, that's the specific number. And that's going to be the highest number the US economy delivered since the mid-1980s. And then you have a number of European countries that are going to deliver strong growth, the Euro area. And we are expecting China to deliver a very strong growth number. Martin is going to delve into our China outlook. But when you look at these economies, they are delivering strong growth. They have been able to do two things. One, they have been providing very large fiscal, monetary, and financial policy support programs. Two, they have been rapidly vaccinating their populations and basically trying to normalize economic activity. In the case of emerging market developing economies, the headline number, 6% for this year, looks quite high. Indeed, you should expect high growth, very strong rebound when you have this type of deep recession last year. But if we take out China from that growth number, it goes down to around 4.5%. So the growth in the case of emerging market developed economies is having serious still headwinds related to limited vaccination programs and, of course, limited support. In the case of East Asia Pacific, we have a healthy growth at the back of China, but a number of other countries in the region are delivering strong numbers, strong growth numbers. But then you look at a region like Sub-Saharan Africa, we are expecting growth around 2.8%, which is lower than the region's growth number over the period 2013-2019. And we did not upgrade our Sub-Saharan Africa growth forecast. Indeed, we downgraded next year's growth number. Then you have a region like Latin America and Caribbean, supported by, of course, the commodity prices coming back, but still facing significant outbreaks in many major economies. Let me turn to a discussion of the strength of this recovery. As I mentioned, this is going to be the strongest rebound we have observed after a global recession over the past 80 years. What we did is we looked at recessions over the past 150 years. And then, of course, over the past 80 years, you have around 6 of them. And this one, if our projection is correct, is going to basically be followed by the strongest rebound, as the left panel shows you. Now, I mentioned the challenge when it comes to distribution of growth around the world and the unevenness of the recovery. When you have a recession, what happens is that in the first 2 years of the recovery, a significant fraction of countries go back to their pre-global recession per capita income levels. That number is around 75%, as you can see in the middle panel. But this recession is going to basically exhibit a striking dichotomy between advanced economies and emerging market developing economies. We are expecting by the end of 2022, almost all advanced economies go back to their pre-crisis per capita income levels. In the case of emerging market developing economies, only 1/3 of them will get back to their pre-crisis per capita income levels. One reason for this outcome is vaccination progress we see in different parts of the world. In fact, depending on the vaccination progress countries made, forecasts are upgraded, and the extent of forecast upgrades, as you see on the right, depends on whether countries have made enough progress when it comes to vaccination. In the case of emerging market developing economies, those countries that basically fall into the bottom quartile of vaccination progress ended up experiencing forecast downgrades for 2021. And there were sizable differences between forecast upgrades of countries, including advanced economies, emerging developing economies, when it comes to, of course, this year's growth number and how that differs with respect to progress in the pace of vaccination. Now, even we expect this record growth number in 2021, we are concerned about ability of many developing economies to continue catching up in terms of basically getting closer to per capita income levels of advanced economies. It is useful to stop and think about what happened over the past decade, 2010 and 2019, in terms of these economies' ability to catch up with advanced economies. Here on the left, you see the per capita income growth difference of these economies with advanced economies per capita income growth. So we are basically taking the income growth of emerging market developed economies and subtracting the advanced economies per capita income growth. When you do that, you see that, of course, 2010-18, that number slightly above 2. For the next 3 years, 21, 22, 23, we are expecting that number close to 0. For low-income countries, the number is going to be -2. For fragile conflict states, close to -4. Small states, most of them heavily relying on tourism, the number is going to be negative. For members of International Development Association, these are the poor countries, the number is going to be negative. If you look at the regions, for the Latin America, Middle East, North Africa, Sub-Saharan Africa, we did not see income catch-up in 2010s. In fact, these regions become poorer relative to advanced economies, and that trend will continue during the next 3 years. So when it comes to generating income, which is going to be critical as we think about the recovery going forward, we are really concerned about what we see around the world, and we are really concerned about the poorest countries that haven't been able to provide the type of support, policy support necessary during this deep crisis. And now they're lagging behind when it comes to, of course, vaccination progress. Low-income countries so far vaccinated only 0.3% of their population. Not 30%, not 3%, 0.3%. So it's going to be critical for the global community to get together and find ways to speed up the vaccination progress everywhere. So we will see a material change in economic prospects. This brings me to the risks to global growth. As much as there is growth at the global level, we still think that there are formidable downside risks. And the single most important risk, of course, the continued COVID-19 flare-ups and delays in vaccination programs in emerging market developed economies. Unless we basically find a systematic, speedy way to vaccinate everyone everywhere, we will have health problems in different parts of the world and of course, local breakouts. And that happens, there are consequences, as we know, because of the transmission of the disease. Elevated debt levels in the corporate side as well as the sovereign side, major problem, and the financial market stress can happen because of elevated debt levels or because of reassessment of inflation prospects. We are worried about food insecurity in an environment we see a significant increase in food prices. We are worried about geopolitical risks and, of course, the climate-related risks. But there is a better outcome, what we call upside risks. If we can end the pandemic much faster than what we are projecting in the baseline, and if there are strong spillovers from major economies that basically translate into a synchronized global boom with the, of course, help of speedy vaccination programs, then we might see even higher growth at the global level as well as in emerging market developing economies. One of the important risks we discussed in the report is emerging inflation pressures. When you look at what happened to inflation during last year, inflation basically collapsed. We saw a significant decline in inflation around March, April, and then after May, June, inflation started coming back. We started from a low base when we think about inflation relative to 90s or 80s. We saw basically the smallest decline in inflation in a global recession, but then we saw the fastest increase following basically recession at the global level and at different country groups when it comes to inflation. This has raised a wide range of questions, and one question is that whether we will see higher inflation down the road. Our models suggest that indeed we will see higher inflation. By the end of this year, inflation can go up to 3.8, 3.9 at the global level, but that will be temporary, given that we still have inflation expectations under control in emerging developing economies and in advanced economies. You look at 1 year ahead inflation expectations, you look at 5 year ahead inflation expectations, and they are pretty much contained. Let me quickly talk about the two other questions. The second question, what are the implications of high trade costs? These costs are quite high. When you look at how high they are in fact 2 times higher than the cost when the same good traded domestically. These costs have been going down over the years, but still they are formidable. Why this is a big problem? It is a big problem because prior to global financial crisis, we saw global trade growing much faster than output. After the global financial crisis, still there is a little bit of difference between the output growth and the trade growth, but that difference is much smaller than what we saw before. In many countries, trade has been a catalyzing force when it comes to income growth, when it comes to elimination of poverty. But now, in the post-global recession period, as we look around for engines of growth, to make trade again an engine of growth, we need to find ways to reduce these trade costs. And these costs are not necessarily about tariffs. In fact, tariffs account for less than 10% of these trade costs. And those tariffs have declined significantly over time. One other important observation is that trade costs are much higher in emerging developing economies than advanced economies. So it is much more important to focus on these costs in emerging market developing economies to make progress when it comes to, propping up the amount of trade. There are a number of reasons why trade costs are high. But of course, the regulations at the border, connectivity related to infrastructure between the inland and the ports, trade policy related barriers, and in some cases, geography, distance of course matters, play important roles in driving these cost outcomes. Some regions have higher trade costs than others. For example, if you look at South Asia and Sub-Saharan Africa, you see the trade costs tend to be higher than other regions. But overall, around the world, we see significant opportunities by simply reducing the regulations and red tape at the border, by simply improving trade infrastructure, by simply finding ways improving shipping connectivity and reducing logistics costs to basically have a significant impact on the overall trade costs and then, of course, the growth of trade. Let me turn to the third question. What are major policy priorities? The first priority is to find ways to end the pandemic. And that starts with accelerating vaccine distribution and deployment. In this context, the latest G7 summit provided quite a bit of commitment. It's going to be important to deliver that commitment and build on that momentum and accelerate the deployment of vaccines in emerging market developing economies and the low-income countries. Unless we contain the pandemic, we will continue having problems on the economic front. The second important policy priority is finding ways to basically supporting the recovery. And this is going to require quite a bit of finesse when it comes to design of macro policies. On the one hand, it is going to be critical to provide the necessary support so there is durable recovery ahead of us. On the other hand, policymakers are going to face critical challenges in the context of price stability and fiscal sustainability. In that context, calibrating policies, creating an environment of credible commitment with respect to medium-term objectives, with respect to independence of central banks, with respect to, maintaining core principles of financial stability, going to be all critical. Beyond the near-term policy challenge, there is a very large agenda when it comes to medium and the long-term growth. And that centers around reforms for green, resilient, and inclusive development. In this report, of course, we focus on the importance of trade costs. But in general, there are other critical policy priorities. Work reallocation in the post-pandemic period is going to be critical, given that some jobs might disappear and disappear permanently. So we need to find ways to employ workers in new jobs. And that job losses can happen simply because of technological change. We need to find ways to raise human capital to meet the demands of, new millennium in the context of digital technologies. And of course, we need to adjust our economies in the context of infrastructure, in the context of regulation, to improve digital connectivity. Addressing informality is going to be critical. We released a very comprehensive study on informality last month. I invite all of you to check that study. And the enduring challenge of climate change will be with us. And we need to find ways and aggressive ways to basically increase green investment. In the context of trade costs, there are measures, and we think that these measures are easier to undertake when it comes to basically finding ways to improve the growth of trade while reducing the cost of trading. And that starts with, of course, improving connectivity when it comes to shipping, finding ways to reduce the logistics, and easing border processes, finding ways to improve trade facilitation. So however you look at it, in many metrics, emerging market developing economies are way behind advanced economies when it comes to different costs trade has to confront when goods are crossing the border. In the chapter, we basically discuss these issues in detail, and we are hoping that we are going to have a more robust discussion at the global forum when it comes to reducing the cost of trade and improving the growth of global trade. Let me quickly summarize. I focused on three questions. The first one, what are near-term prospects for the global economy? There is no question. The global economy is experiencing very strong growth. We think that that is actually going to be the strongest global growth following a global recession in the past 80 years. As much as that number is welcome, there is a disturbing reality. This is a highly uneven recovery, with emerging market developing economies, especially the poorest one, in terms of per capita incomes, lagging behind. And that will generate all types of challenges and add to the development problems we have. Risks are still tilted to the downside. And unless we basically address the main risk in terms of vaccination progress, it's going to be difficult to eliminate certain risks. Second question, what are the implications of high trade costs? One important observation, as much as surprising, these costs are very high. In fact, they are 2 times higher than the cost we see the same goods traded domestically. But it is possible to reduce them by undertaking measures. Some of these measures are like low-hanging fruit, reduction in shipping and logistic costs, reducing the red tape at the border. The third, what are the policy priorities? And I think these priorities are clear. We need to control the pandemic, find ways to support the recovery, and undertake the reforms to basically improve long-term growth prospects. We have a wide range of publications looking at different issues. I invite all of you to visit our webpage, look at our commodity markets outlook. The next issue is going to be released in October. And as I mentioned, our new study, on informality, we have been presenting, and we have presented in China as well, is something you might want to check. But let me stop here, Henry, back to you. Thank you.
Okay, thank you, Dr. Kose, for your excellent presentation. I think this is exactly what we need every now and then to have a very authoritative analysis of the global situation. I think we can learn quite a bit from your presentation. Basically, we see the world will recover from this pandemic, and the economy will have the growth that you mentioned in your report. That probably is the 80s. The post-pandemic growth will probably reach the highest point in 80 years. So that's an enormous good encouragement news. But of course, to get that, of course, you mentioned that we have to really accelerate the vaccine injection, whereas I think there's a huge imbalance of that, unevenly implemented. I think the developed countries, China and European countries, US is doing well, but the vast developing countries, the global south, is still struggling with that. So I think you have put forward a right path in this report of how we can get off that to achieve high economic growth. But of course, we are still not out of the woods yet because of the uneven vaccine. So which means we have to support global efforts to fight that. And of course, China is doing that. China is exported, but also providing a lot of vaccine to probably one of the most active countries in providing vaccine around the world, to 50, 60, 70 countries. And I know that G7, that leaders has pledged 1 billion doses for the vaccine injection as well to the developing countries. We hope that with the global attention, with the World Bank report calling for that, that is really useful. But I also really appreciate your second category of analysis of the trade. Basically, is another big factor in stimulating the global economy. But how we can really reduce the trade cost, because that's really, it's the right question you have been identified. We need a trade. We need a revived free trade. We need to really get rid of the protectionism, possibly tariff that imposed on countries and on each other. But we really need trade reform. But also those points are really shipping cost, connectivity cost, port access, and things like that. We should really have a policy to do that. But you mentioned many areas like digital economy, green economy, human resources development. Those are crucial factors for really for the world get out of these woods. But I think that we see the trend, we see the hope. So I think the World Bank has given us very strong confidence in continue the right policy, but also been cautioning us, where are the challenges, problem are, and we have to really solve that and put, making right moves and sound policies to really recover the world economy. So I think that's really fascinating to hear what you have been describing. Thank you again. And as I'd like now to maybe get another renowned World Bank expert, Martin Reiser. I mean, you are in China. You've been basically a World Bank country director for China and Mongolia and Korea for the last over 2 years. And actually, you are leading a team that is managing and involving the partnership with China. So, I mean, World Bank has always been a great facilitator. I mean, for many projects in China in the past, and actually built some patterns for Chinese project bidding system, for example. So you have a lot of knowledge on that. I know that you've been had a PhD in economics. Also, you have been studied in London and also for School of Economics and Political Science, and worked at World Economics and the European Bank for Reconstruction and Development. And also you were the country director for strategy and editor of a transition report since joining the World Bank in 2003. So you've been, Dr. Reiser, you've been really having these positions in different parts of the world. You've been really a country manager or director for World Bank at the Ukraine, Belarus, Moldova, Turkey, and also Brazil. I mean, all those big emerging economies. So, but now you've been in China for the last over 2 years already. So what's your take? What's your assessment on the Chinese situation, but also in light of this report with the World Bank? And for example, China in this report has been forecasted as for next year about 8.5%, which is the last time you projected was 7.9%. So what are your rationale behind that? Maybe you can give us some light on that, Dr. Reiser, please.
Thank you very much, Dr. Wang. It's great to be with you again. I'm not going to show any slides. I did use the time of Ayhan's presentation to change my background to a nicer photograph of the Forbidden City and the moat around it, just to show how much I enjoy living in Beijing. And it's been a good time, in part because China has done so well in controlling the pandemic at home. And that's a key message coming out of Dr. Kose's presentation, that is the foundation for the rapid recovery that we're seeing in some countries, particularly those that have been either able to implement the right public health measures or being able to roll out vaccines, and ideally a combination of the two. So our upgrading of the forecast in China is very much a reflection of China's trajectory over the whole of the past year, with a very deep recession at the beginning when it was at the epicenter of the pandemic, and consequently in the first quarter of 2021, a very rapid rebound, or a very high rebound that leads essentially to growth in 2021 being forecast to be around 8.5%. However, when you look behind those headline numbers, you see that what's actually happening in China right now is a rotation of the sources of growth, and in some sense, a return to normality. So by the end of this year, calendar year, we predict that China will essentially have caught up to the trend that it was on before the pandemic struck. And so it will essentially have made up all of the lost ground. And that's similar to some of the advanced economies, but is very different to what we're seeing in many other emerging markets. And so what we're seeing in China at the moment is, in some sense, already the normalization of growth around its long-term trend. And so when you look into 2022, growth will be declining to 5.4%. And as such, growth will essentially have rejoined the trend that it was on over the last 5 years leading up to the events of 2020. And behind that, there is a shift, a rotation, as I mentioned, from growth driven very much by public investment and net exports during the first phase of the recovery, towards growth driven much more by domestic consumption and private investment that takes over the mantle from the very fast expansion of public investment. And behind that is obviously a normalization of both credit policy and to some extent fiscal policy. And so what you're seeing is that the very rapid recovery in global trade for manufacturing in particular, and the specific demand for some of the goods that China is producing, namely medical equipment and electronics, was driving a very rapid improvement in the profit cycle. And that, together with the domestic recovery, has swelled the balance sheets of, has swelled the income statements of the profits of the Chinese companies. And they are now able to use those profits to start investing. And that in turn has allowed the monetary authorities to restart their de-risking campaign and reduce some of the credit stimulus that they had injected into the economy in the course of 2020. And that will lead to tightening liquidity in those sectors that are dependent on public credit, namely infrastructure, local governments' finance vehicles, and to some extent the real estate sector. But in other parts of the economy, we expect private investment to remain quite strong. And in the first quarter of 2021, what we saw was that consumption returned to accounting for about 2/3 of economic growth, whereas in the course of 2020, of course, consumption had been lagging very much behind. Now, Ayhan mentioned the risks that we see associated with the unevenness of the global recovery and the fact that the pandemic is still not fully under control. We also see the risk in the continued tensions in international trade relations. And this could, in a downside scenario, hamper investment confidence even in China. It could lead to continued local outbreaks, and that could derail or at least temporarily stop the consumption recovery. We don't think that risks. We think that risks in China are balanced, and there's clearly the upside risk that Dr. Kose also mentioned, and that could, at the margin, benefit China with somewhat stronger export demand as well. Now, what I want to do in the 5 remaining minutes of my brief remarks is to focus a little bit on the third part of what Dr. Kose was talking about, namely the green, resilient and inclusive recovery or development. We call it GRID as an acronym, since in the World Bank we like acronyms. And I think for China, as in 2021, the economy is already starting to move back towards the pre-pandemic trend. This also means that some of the challenges that China was facing pre-pandemic have been brought back to the fore and are now back on the top of the policy agenda. This includes the fact that productivity growth in China had been declining, the fact that there are still distortions in the allocation of credit, but also restrictions on the mobility of labor that mean that resources are not necessarily moving as swiftly and as flexibly to those companies with the best prospects to expand. And that's holding back both the diffusion of technologies and the diffusion of productivity throughout the economy, and potentially a barrier to faster productivity growth. We're also seeing that the population is aging rapidly, that population growth is diminishing, and unlike in previous decades, will no longer be a driving force for economic growth in China. That in itself is not necessarily a bad thing. It means that for a while still, the labor force will continue to grow before it starts declining. But it does mean that during the next decade, the investment in human capital, the improvement in skills is going to drive the contribution that labor makes to economic growth. And so here China has a significant challenge to confront, in that while at the frontier in Shanghai and in Beijing and in some of the other coastal cities, children coming out of school have an excellent education that rivals the best education in the world. If you go to the rural areas, that is much less the case. And yet China needs the entire cohort of future workers to have access to the best possible skills in order to maximize the benefits that it can get from that cohort before the population and the working population really starts to decline more rapidly. Ayhan also talked about trade costs. And I think this is an opportunity both to highlight the continued opening that China has done over the 40 years and has continued to do in the last few years, particularly in the area of opening some sectors to foreign investment. But in one key sector of the economy, which has been driving productivity growth in the most advanced countries around the world, the services sector, China remains relatively restricted, both to investment and to trade. And we see opportunities for more productivity growth coming out of further opening up in those areas in which China remains more restricted. And many of the restrictions relate to behind the border issues, such as licenses, investment impediments, and other differences in access to resources between domestic and foreign firms that are part of some of the trade costs that Dr. Kose was talking about in his presentation. And so clearly there are areas for improvement. And then finally, and perhaps most importantly, the need for China to ready its economy and to shift its economy towards the goals that President Xi announced at the UN General Assembly last September, and that he reinforced in subsequent interventions in December and also in April this year. This is a major challenge for all countries, and China's announcement of a net zero target by 2020 is ambitious, and it now needs to be followed through with concrete actions. And unfortunately, one has to say that 2020 was a year of rapid recovery for the Chinese economy, but it was not a year of a green recovery. The recovery was more traditional. And as a result, the carbon intensity of China's economy has not declined in 2020 by nearly the same amount as it did in previous years. We see an interruption in the trend of improving of reducing the carbon intensity of China's economy. And as a result, we saw an increase in emissions last year, even though growth was quite low. And so that pattern needs to change, and the economy needs to shift to greener sectors. We think that those are entirely compatible with faster productivity growth, because we think, for instance, one of the areas in which China can easily green is by shifting from heavy industry towards more digital technology-driven sectors in services. And this would be also, I think, associated with an improvement in productivity. We will analyze these issues in quite a bit more detail in our upcoming China economic update. And so I don't want to go into a lot more details. Just to mention finally that one of the themes in that forthcoming China economic update will be also to look at the inclusiveness of China's growth path and to analyze what is next for China after the eradication of extreme poverty in 2020. What does this mean, this milestone mean, for the future agenda of an inclusive growth path for China? And so in many ways, the foundation has been laid during the recovery, but the challenges that China faces to really achieve inclusive and resilient as well as green development are quite formidable and deserve all of the attention of policymakers going forward. So with that, let me close and thank you again, Dr. Wang, for giving us this platform, and we really look forward to the discussion with your audience.
Great. Okay, thank you, Martin, and excellent summary of your analysis of the situation in China. Yes, I think I agree with many of your points there. Actually, China now maintained probably one of the highest economic growth is because China, I think, largely has managed getting out of the pandemic earlier than many other countries. And but also, as you mentioned, China is lifted 800 million people out of poverty, but particularly they announced that they have get rid of extreme poverty at the beginning of this year. So there's a lot of new efforts now being put into human resource development. And like now, China has 1.3 billion people covered with some Medicare and over 1 billion with some social security benefits. And of course, also with the vast infrastructure network has been built into place where anywhere you go is a few hours by train. And so that kind of synergy that will certainly probably drive the dual circulation, also the consumption, the digital economy, and where it's already been almost 40% of Chinese GDP, 38 of that is digital related, and it's growing. So service sector is coming up. Manufacturers, but I agree. There's still we need to how we can get rid of the trade cost. I mean, also to have a more open access to really to be a more open economy, so that while we have this dual circulation, we have a two-wheel drive basically to accelerate domestic economy and international exchanges as well. So I think it's important that China continues this 1.4 billion people path towards sustainable but also a green and the environment friendly growth. So absolutely, you mentioned all those important factors as well. I think one thing that you mentioned, I do worry a bit about this, is this geopolitical risk going on that we see the world. I mean, we all need to get out of the pandemic, but we see the geopolitical risk and then the China as well. A question actually we collected because before we announced this, before the event tonight, there's a lot of enthusiasm. We have many media questions actually. So now we have both the two additional World Bank economists, senior country economist Vashakmadz, and we have another senior country economist Lucia Quaglietti. So both of them are working with the Prospect Group of the World Bank as well. And so I'll go through some of those questions, and maybe any of you can jump in and answer those questions. I have a question from actually the Economic Daily that there's quite a few of them. I just go through that, and then we'll cover other medias. What are your views? The first question: what are your views on the trend and prospects of economy in Europe in the post-pandemic period? What are the potential risks? how Europe will adjust its own foreign trade and economic policies. What are the challenges, opportunities in international cooperation for China? Specifically, what are the prospects in cooperation concerning green financing and digital economy? And third question from the same Economic Daily is that the G7 summit has just ended, and then US-EU economic and trade relations seem to have eased up recently. Does this mean that they will have returned to somewhat normal track? What are the still problem or disagreement they may have? And also, what do you see the future of China-EU comprehensive agreement on investment, maybe? So those are the, from one media, Economic Daily in China. Maybe, you can answer some of those questions if you want. Any of you?
Ayhan, you want to go first on the European prospects, and I can take the last question.
Yes, I think that's a good way of doing it, Martin. So on the euro area, the recent developments have been pretty good. We upgraded our growth forecast from 3.6 to 4%, and we see activity normalizing. And what happened is that, of course, late last year there was a significant outbreak, but the impact of that outbreak was more muted than what we expected and what financial market expected. And when we look at the latest data, we see that activity is picking up in the second quarter. The COVID-19 case numbers have been going down. Vaccination progress has improved definitely. The retail sales picking up. So all in all, we are expecting a robust recovery in the euro area. And our hope is that this recovery, of course, on the upside, will have large spillover effects to the periphery, including those countries in emerging Europe and Central Asia, emerging market and developing economies. Our growth forecast for the region, these emerging developing economies, this year close to 4%. We upgraded our forecast. Some of these economies, of course, oil exporters, they are taking advantage of higher oil prices. But the challenge still is to make sure some of these economies are gonna get ahead of the pandemic and normalize not just the kind of the real activity, but start normalizing the activity in the services sector. There are some countries that rely on tourism. We need to wait for, things really normalize, the vaccination progress come to a certain level, so the tourist arrivals gonna increase meaningfully. So all in all, in developed Europe, emerging market and developing economy, Europe, Central Asia, things have been improving, and we are optimistic down the road. We will see even better numbers coming out. Martin, you want to take the question on China, EU relations, and then other issues?
Sure. I mean, it's always difficult from the position of being in one country to talk about the relations between one country and another country or other parts of the world. But let me say as much as I think I feel competent to say. There was a question of cooperation in the green area and in green finance. And I think that is clearly an area where global cooperation is both desirable and possible. And it seems that a lot of, the two sides agreed to have a high-level dialogue on climate change, for example, on climate action. I think a lot is possible in harmonizing standards for green finance. I think the PBOC in China has done some important work in that regard, moving the green taxonomy in China closer to the European taxonomy, and thereby making it possible that you could see for global investors an emerging market in green assets, including green assets in China. I think that would be a good outcome. It would be good to promote and accelerate the green transition in China, and it would be good for the further integration of markets. In the case of the comprehensive investment agreement, I think the last word on this was spoken by the European Parliament, and they've put it on ice for the time being. We are not privy to or party to the discussions ongoing or that may happen in the future around what is needed to take it out of the icebox, but that is where it currently is. And I think that, I don't want to talk about the reasons why that is, but I think the two sides will have to talk about what each expects from the other to put it back on track. But at the moment, it doesn't look like it's making any rapid progress. So let me leave it at that. I think on the, let me just leave it at that for those two questions. Thank you.
Okay, and although I agree with you, Martin, I think probably those regional agreement, we'll talk about trade, I think in Dr. Kose's presentation that now we see RCEP is formulated, probably going to be effective at the end of the year, beginning of next year. We see CPTPP is accelerating. The UK wants to join that, and of course, KAI is, as you said, been frozen. But we hope that it will be back again, and because it's going to really help the world economy for both Europe and China. I think that we should let political disturbances really interrupt our economic development. I hope that we can stop that issue as time goes on. Now we have some question from CGTN, which is a major news network here as well. They have 3 questions. What are the risks to the world economy given that COVID-19 new variants keep popping up through overall pandemic? Though overall pandemic has largely been under control. So this is first question. Second, will there be a new normal for the interaction between the Chinese and the US economies in the wake of a pandemic incurred restrictions and the trade conflict, the policy which Biden administration continues? How about widening inequality exacerbated by a pandemic? Does the World Bank has a policy measure installed to address those issues? So basically, 3 questions. I don't know if you want to answer any of those.
Maybe Eka, you would like to answer the first question with respect to risks confronting the global economy. And then Martin, you want to take the second question about the new normal involving China, and then I will try to take the inequality question, and Lucia can bring some insights from the trade chapter. Eka?
Yes, thank you. Good evening. Nice meeting with you. So clearly, as Ayhan described, we have been surprised with the outcome of the world economy, and the outlook has been revised up. But there are still very significant risks, as you said, and the main risks are around 2 issues, actually. The one is clearly the lingering pandemic. And although we have seen major progress in the world, still the pandemic has not disappeared. And then the seasonality and the variants are the biggest risk, which we are seeing around the pandemic. Actually, for the region, as you know, the pandemic is still lingering. Although in the world it has declined, the Asia is still struggling with high cases. It was India before, and now it is Malaysia, Thailand in the region, Philippines and Indonesia still having high cases. And Clearly, the progress of vaccination is super important for that. In that case, in the region, China has almost reached 40% of its population vaccinated, while the rest of the region is lingering. And the same for the rest of the world. The unevenness of vaccination is having major impact on the outcomes. And as Ayhan again stressed out, the outlook is very uneven exactly because of the vaccination outlook. The second risk is the financial risk. During the period of pandemic, the countries have been enjoying very easy financial conditions, but this may not last forever. We are seeing already higher inflation, although it's going to be transitory in our expectation. But if the inflation expectations are going to be de-anchored, then of course there may be earlier than expected tightening of financial conditions. And in the presence of global elevated higher debt, this will create a risk for the economies. And then, of course, there is also for the region specifically, we are seeing of risk related to natural disasters. Actually, for many regional economies, the negative outcomes were related to typhoons and tsunamis and earthquakes. And this risk is related to the environment, especially for island economies. It presents the very, very serious risk. Now, the permanent risk and the risk for the medium-term outlook is the impact of the pandemic on the potential growth. And then there is a risk for many economies, perhaps not so much for China, which came out of the pandemic quickly. There may be permanent strong damages through lower investment and damages to human capital. But I want to also conclude that we are also seeing a risk of higher growth, and this higher growth is a function of two determinants. One is better than expected vaccination, and the second is stronger spillovers from global strong recovery, especially in advancing economies and China. And here I just want to connect to your previous questions. Countries which are open, which trade more, of course, are the countries which will benefit more from that last spillover risk. So thank you.
Thank you. Mm-hmm. Yeah, second.
Dr. Wang, I mean, I appreciate the search for what the future of US-Chinese relations might look like, but I'm not sure I have any insights to offer. Okay. I think the two sides are talking, and that's important. I always believe that talks are better than not talking, but there clearly are still a number of differences, some extending to the economic sphere, and there I think the issues that led to the original trade tensions are to some extent still around, and hopefully some progress can be made on those. But also some relating to the political sphere, which are areas on which we don't do analysis and we're not particularly well placed to speak. I do think, however, that there is also some effort to delineate areas of potential cooperation. And I understand that recently there has been a discussion about what those areas might be in addition to climate change. And so I do hope that we'll see some progress on those as well. Whether that constitutes a new normal or not, I don't want to speculate. But clearly, we hope that the two sides can make progress in their discussions.
That's good to hear. Thank you. Thank you for that. I have another question from the barons in China. Given the recent elevated inflation reading, including a newly highest CPI index in May in the US, what influence it may have on global economy and how to cope with it?
So this is an important question, Henry. Let me quickly talk about inflation. Maybe I can also talk about the question on inequality we received in the previous round. So with respect to inflation, there is no question. We will see higher inflation in the US this year and in all likelihood next year. And we will see higher inflation around the world this year and in all likelihood next year. That's what we saw in 2020. The big question is whether this higher inflation will be with us for an extended period of time, and at what level it will get to. Now, when we look at the econometrics of the problem, our model-based inflation forecast, we see, of course, higher inflation, as I mentioned, in advanced economies, in emerging market, developing economies this year. But as long as inflation expectations are anchored, this is temporary. We know the reasons why we see higher inflation. There is significant pent-up demand. There is a wide range of supply disruptions that basically increase the cost. And of course, we see record high increases in commodity prices. So the stage is set to basically observe higher prices. And we are seeing a very strong rebound at the global level, especially in advanced economies. In this environment, we need to think beyond the near term and the consequences of these changes over the next 2 to 3 years. And when you think about that, our growth forecasts beyond 2021 are moderating. And that means demand is going to stabilize. In all likelihood, we will see cooling off of commodity prices as well. With that, and given the inflation expectations are still anchored, we see this temporary spike in inflation, and things are normalizing down the road. Now, how should central banks respond to these changes? As long as inflation is within the band of the inflation targets, a response is not necessarily needed. Our worry is that there would be financial market participants. They look at the inflationary pressures and expect higher interest rates that will translate into higher market interest rates and push up the overall borrowing cost for emerging market developing economies. And this can generate all types of challenges for these economies as they are trying to still support their economies. Some of them might end up in a corner. They have to basically withdraw monetary policy support. Now, in the context of inequality, we see, especially what we documented in the report, these poorer developing economies lagging behind. There are some important messages for the global community, as well as for these economies' policymakers. For the global community, there has to be a collective understanding that the damage coming from the pandemic is deep, it is protracted, and it will be with us for a very long time period. And it will widen the gap between advanced economies and these poorer economies, not just in terms of income levels, in terms of basic development outcomes, when it comes to health, when it comes to education, when it comes to all types of basically indicators of development. That will require global community to get together and provide the necessary support in the context of course, the vaccines, but in the context of financial support as well. These economies have very large needs, and these needs cannot be basically addressed with their limited means. Now, in terms of what the policymakers of these countries can do, growth is important, but to get the growth, they need to find ways to increase investment, and that starts with undertaking the necessary reforms. There is a large list of those. We discuss these issues quite often at different platforms. But I think that this pandemic, given its impact on the human capital, given its impact on the firms, it's going to be critical, the policymakers, to find ways to, in a sense, to compensate the human capital losses, undertaking measures to improve education. And then, yes, this was a once in a century crisis, but it can be a once in a century opportunity to improve the health systems and really transform these countries. Some of them are having demographic dividends and bringing a large number of labor to the global labor market. But let me turn to Lucia to talk about why it is critical to reduce the trade costs, improve the trade growth. Ultimately, that will help to raise the income levels and cope with the problem of inequality. Lucia?
Yes, thanks, Ayhan, and good morning, afternoon, everybody. It's a pleasure to be here. And yes, I mean, as Ayhan mentioned before, we stressed reducing trade costs as one of the main policy leeway that emerging and developing economies have and low-income countries have to reinvigorate growth and productivity. And the reason why we do stress this as one of the main policy options that they have at their disposal is because we see a potential, a big potential there. So, I mean, as Ayhan showed you before, in many of those economies, trade costs remain comparatively elevated compared to advanced economy, for example. So, I mean, we do see reducing trade costs as an important way of boosting income growth and productivity. And I mean, it's not new that trade is, of course, associated with growth and productivity. A study from the World Bank from 2020, the World Development Report, suggests that 1% increase in trade lift per capita income by 0.2 percentage point. And of course, other studies suggest that GVC integration is associated with reduced vulnerability to domestic shocks, for example. One important aspect is also about the policy to reduce trade costs. And one thing that we stress in the chapter is that the comprehensive reforms that envisage a reduction across the many areas that Ayhan mentioned before to increase connectivity, increase logistic performance, reduce hurdles at the border, if brought up together and if implemented together, can yield really large gains. We have a quick estimation that suggests that if an average emerging and developing economies would implement those policies at once, could actually reduce the trade costs by half. And then maybe one last word on inequality, connecting to what Ayhan was just saying on inequality. Of course, there is, and there has been a wide debate on the interlinkages between trade and inequality, which is not settled at all yet. But what we do recommend in the report is that while countries put in place policy to reduce trade costs, they also look more broadly to make sure that those that might be left behind and might not, those groups that might not be sharing the gain from GVC integration are taken care of through active labor market policy or wage insurance schemes and so on. So while fostering trade and growth is also important to have a look at inequality and make sure that the groups that might not immediately benefit from it are supported. Thank you, Ayhan.
Thank you. Great. It's really great answers, and I'm really very thankful for all you are sharing. And my staff was showing me there's about 500,000 already viewers online, and so this is really very stimulating and discussion. Maybe since we probably run out of time, but I would like to maybe pose a final question on this. Is that we know that this pandemic has really stopped many things. For example, tourism has been really shut down, basically. I mean, in the past, tourism can generate maybe 5 to 10% of the global GDP. Now, because of this tourism effect, that we don't really have this new stimulus. So we hope that with the Summer Olympic in Tokyo, with the Winter Olympic in Beijing, we can really starting to find a pattern for international travel to happen, so that we may bring back the students, bring back the exchanges of the personnel and the tourism. So that probably is one of the factors, how we can really address that. That's number one. Number two is that you talk about this inequality issue, which I think is very true. Even some, top elite, maybe even the wealth is getting even larger during the pandemic. And we see also, 1% of the top wealth is probably equal to 30–40% of the massive population. And that is really not benefiting for the inclusive globalization. Where I see now President Biden is trying to raise the minimum wages of the US, but also the G7 countries proposing a flat tax for those tax havens. So with those tax measures being taken, we'll see more benefits being trickled back, and maybe benefit in the Midwest or Rust Belt or other regions in the world, so that maybe China would not be singled out as the only cause of that. I mean, now we'll be seeing that quite often. But finally, I would also want to see your comment, because infrastructure is also one of the main key drivers of the global economy. I think one of the things China is being able to, economy is going very strong, is they have a very easy economy, digital infrastructure. And so what do you think about this? The US now is also proposing, President Biden is proposing a huge infrastructure plan, where I think debates in the Congress now. And now at this G7, he proposed B3W now, I mean, also a kind of infrastructure plan. So do you see the global infrastructure, including World Bank, AIB, that they can work together to push the infrastructure revolution or transformation for the world? And also, finally, what are the legacy of the pandemic that we benefited from? Faster communication, or working at home, or changing the style of productivity. So maybe, this is a very open question, but whatever you can answer, it will be quite good to end this. So
thank you, Henry. I think you covered quite a bit of ground, and this is a good transition to, I think, our next report, to think through these questions and then how we can address them. I'm going to briefly talk about the issue of trade and tourism. How do we see the kind of the developments? Because as you mentioned, it is going to be really critical. And then maybe I can ask Eka to talk about a little bit of inequality in the region, and Martin can talk about how we are thinking the importance of infrastructure in China. And of course, he was the country director of Brazil, Turkey, major emerging market economies. Now, of course, he's looking at things from the perspective of China, and he has on the ground experience. So let me start with trade. The pandemic triggered a shortfall of world trade in 2020. We ended up around 8.3% contraction. The decline was less severe than what happened during 2009, and the recovery was faster. By November 2020, global goods trade had recovered actually the pre-pandemic levels. Services trade, which had been hit harder in 2020, has also picked up, but remains below pre-pandemic levels. Tourism, the issue you mentioned, remains particularly depressed, even in countries that have not experienced major outbreaks, such as small island economies. This year, we are expecting trade growth to be around 8.3%, and next year, that number is going to be around 6.3%. Now, of course, when you think about tourism-relying economies, there are significant challenges. 50% of these economies are going to continue grappling with still depressed international travel levels. So you need to basically see international travel picking up to certain levels, and then the tourist arrivals are going to increase. So the bottom line is that many of these economies ended up getting hit very hard last year, and that will continue to some extent this year and the next year. So it is everybody's interest to improve the vaccination programs so we can get activity back to normal, and we see a broad-based recovery. So the tourism-reliant economies, the recovery quite anemic. With when we look at our projections for 2022, these projections still close to 10% below our pre-pandemic projections. Now, how should we think about the challenges associated with the tourism sector? Of course, some of them have been taking advantage of this transition in terms of thinking about the shifting labor force to other parts of the economy. That is a process. It doesn't happen from one day to the next. And we are advising countries around the world how to think about these challenging issues. You also raised one important question. What are the legacies of this crisis? I think one important legacy, when we think about the nature of the crisis I was alluding to before, this was a health crisis, still ongoing, and I think unfortunately it has been a very painful lesson when it comes to critical importance of public health measures at the domestic level, at the global level. And we have seen shortcomings at the domestic level, at the global level, when it comes to addressing these public health problems. When there are threats to public health, the importance of basically working together rapidly, and basically being prepared. And in many cases, we saw, not just in poor countries, in advanced economies, very serious stress in health systems. And that tells you that basically you need to find ways to improve these systems, especially in emerging market and developing economies. Beyond that sectoral observation, I think one important observation is the one Eka mentioned, how this crisis could translate into weaker potential growth, even weaker than what we were predicting prior to the crisis, which is something we discussed at this forum before. And what is important is to find ways to make sure that doesn't become a legacy, and their policymakers have to play a significant role. But let me turn to Eka about this issue of inequality you raised, because we have done quite a bit of work in the context of the region. And then I'm hoping Martin will address the question with respect to infrastructure and how to think about
should look at inequality is that how the pandemic, as you actually, Professor, correctly pointed out, impacted the sources of future growth. And let me focus here on three aspects. So one is the impact on human capital. And that's very important, right? Because we know that because of the pandemic, not only poor countries, but also the population, the poor parts of the population has suffered disproportionately. And then is the dividend we were expecting to bring stronger growth in future. And that is very important, the impact on human capital. For example, as populous countries as Indonesia, which are struggling with the pandemic, which dealt actually pretty well during the first shock, and the decline was, and the contraction of output was not so strong, the major questions are now about the future of growth because of human capital, because it's a very populous state. The major dividend was going to come from the population, and then what is this impact on education and the future, right, demographics, and especially human capital. Now, the second issue is the same with human capital, and it is women. So we have estimated that, for example, for Asia, women are suffering more violence, and then 24% of respondents in some countries are responding, and sometimes even higher, close to 80%, are saying that they had some violence experienced during the pandemic. And why I'm talking here about these women is that, again, when we look at the future sources of growth, in every report, we would say that this is untapped potential. So if women are disproportionately suffering, and if human capital and the women were hope for future, right, growth, we will need to see an impact on women. And then the third, which is also very important, the small and micro enterprises. And here I want to link it to productivity. We know that a lot of productivity was going to come from small and micro enterprises, and those are the very important fabric for every country. And it took decades to build that fabric in some countries, especially in transition economies like the one where I come from, an ex-Soviet Union, post-Soviet Union, 30 years to just build this fabric of new private enterprises. And those are the ones which were hit most from the pandemic. And so what will take to rebuild, right, that very important aspect of our future growth, which is the bigger contribution to productivity growth. Now, this, I want to link to the last question, which you talked about, the investment. So which investment? We have enough investment in some countries, actually over investment. So investment has two aspects. One is that investment which should bring this growth and help those human capital realizations which we talked about. So we want to see more investment which will allow, right, this human capital to flourish and to contribute to potential growth. So it's not about the amount of investment, but it's about the quality of investment. And then here I want to conclude with the last one. So when we see investment outlook, which will be very important, right, for future growth, we will need to keep one thing in mind. Some investment we will see declining. And this is investment for unsustainable, right, sources of, for example, energy, etc. We are already seeing that. And then we will see new investment coming up. So on balance, the question is, will we get more investment or less investment? And especially given the overall weaker confidence. So to just conclude, I want to say that spending, which is going to clearly benefit the poorest, the most hurt, rehabilitate the remedy the scars, investment which will allow, if there's a next shock, the human capital to benefit proportionately, and not only the big cities and most of the population and students left behind. And then investment also in the as I said, in surrounding on confidence. So what can be done to build confidence, and especially confidence where the small enterprises can strive, which means really very serious reforms. And with that, I want to pass to Martin, as Ayhan said, to talk more about perhaps China. Thank you.
Maybe I just echo one of the points you raised. I think that the human capital, probably the losses for that is during this pandemic is quite something. And also, I think Dr. Kose has mentioned about the tourism. For example, China used to have 150 million outbound tourism globally, but now not probably a single one. So that's a huge loss to the tourism. And also, for example, the student exchanges now, we see, for example, this year, the university entrance exam in China has broken the record for recent years, past the 10 million high school student went to the university entrance exam, break the history of the 10 million mark. And the reason for that is many of them cannot go study overseas now. Used to have a 700,000 students go to the United States, go to overseas in 2019, but this year probably suffer from that. Same is true for all the international students coming to China. Because the pandemic broke out in the Chinese New Year, all the international students was on vacation back home. And then suddenly the lockdown happened, and then most of them can't come back. And then it's not a few months, it's not a year, it's a year and a half now. And we are losing the class of 2020 and the class of 2019. So those are really left a huge scars on damage on the human capital development. I agree. I mean, this is real. So we hope that this report will bring us some new hope. But anyway, Martin, please, your final word as well.
I know we're already running over the allocated time, so I'll be very brief. But look, infrastructure is clearly important. It's clearly the gap is clearly large in some countries, and in others, as Eka mentioned, including China, we believe growth is going to have to come from other sources, because there's increasing evidence that some of the most recent infrastructure investments, particularly in less densely populated areas, while they may have strategic value, don't have a high economic rate of return. And so I think you want to look at infrastructure in the context of the development needs of the countries concerned. Now, clearly, for the rest of the world, what is true for China is in most countries not true, and they have large infrastructure gaps. And as a result, we welcomed when the AIIB was created, and we've done a lot of co-financing with the AIIB. And one of the reasons that works well is that the AIIB is, like us, committed to investing following the best international standards. What does that mean? When we appraise a project, when we look at whether it is a project that we would like to do, we look, of course, at the economic viability of the project. We look at whether the countries that are borrowing have the ability to take on that additional debt. But we also look at whether the environmental and social conditions are present to make sure that the investment can generate not just an economic benefit, but also come with at least no reduction in environmental with the environmental damages, but ideally with an improvement in environmental conditions, as well as an improvement in the livelihoods of the local populations affected by the investment. And that very careful screening of investments, I think, is absolutely critical if we want to make sure that the global realization that we need more infrastructure investment is channeled into the right kinds of projects. Otherwise, we, I think, run the risk of putting a lot of money and then getting disappointed because it's not delivering the impact that we wanted. And for those of us like the World Bank, who've been in development for 75 years, we've had those waves before. We've had big waves of infrastructure investment, and not always were they successful. Not always did they result in the development impact we wanted. And so we should learn from that experience and make sure that this time around, we really pay close attention to project selection, project appraisal, and environmental and social safeguards. And those are embodied in international standards that all of the multilateral development banks have signed up to, and the AIIB is one of them. And that's why we are happy to do business with them and benefit from the additional capital and commitment they bring to the table. Thank you so much.
Okay, great. Thank you, Martin. And so now we probably run out of time. We have almost 650 to 700,000 viewers. I think now they have time to all tune in on this here in China, probably, and also other parts of the world. But I think we had a very stimulating and very enlightening discussion. I think we appreciate that World Bank group has actually present this representation in China to the larger audience here. But also, I think the report has been really very beneficial as well. You know, you pointed out the new forecast, which is one of the most influential forecasts in the world, and also pointed out that now in order to get out of this crisis, we have to really accelerate the vaccine injection as well. I mean, in that case, both China and the US are doing very well. And in that case, both the economy are experienced the highest growth probably in the years we haven't seen. And so this is really, you already pointed the way how countries should work forward and also solve this uneven development and particularly the vaccine application to the developing countries. So I think that's really a right message. But also I'm really impressed with the report that you've been proposing on these trade issues and how we can really reduce the trade cost. I think while we're having a pandemic, while having this isolation, tourism is coming down, we need to really boost the trade, where I think that is a very important way to get us out of this crisis. But the cost, how we can reduce that cost, not increase the cost, not increase the tariff. We need to really, but also how can we facilitate the investment and facilitate free trade is an issue that for all the governments to consider. I'm really glad that World Bank has really emphasized that point. Of course, you have made some policy recommendations as well. We have to do more on the human capital development, on the digital economy, inclusive climate change and environment. So those are great messages. I think we need to come to visit those principles again and again. And I'm glad that you've been emphasize all those that you find this relevant to our time. So really appreciate all of you to join CCG on this on launching of your latest report, which I understand has got a very wide world response as well. I see quite a few media reports on that as well. So once again, thank you to Dr. Kose, Dr. Razor, and also Eka, and of course Lucia, for all your participation tonight. And I don't know if you have any final words. We have a 700,000 audience, which is a great audience to hear all this. And we'll play it again and on our social platform. So on behalf of CCG, and also thank you and thank all the audience tuned in. And I appreciate your time in Washington early in the morning. Thank you so much.
Thank you very much.